Oh, okay. Thank you. Well, good morning, everybody. Thanks for joining us on the Money Matters Mastermind, our second one so far this year. So, for those of you who are on last month's, we are going to be using this as in place of a finance committee like we've had in the past. So we're going to be going over some of our financial numbers, taking a look at our some highlights from the previous month and year-to-date numbers, and then also our financial packet that gets emailed out to our ALC and owners in the beginning of the month. And then each session will have a separate topic that we're going to dive into. So today's is going to go into a profit and loss statement for agents and teams, and using ours as kind of an example to start yours. If you are running one, not running one, we'll kind of go from there. Mike, anything to add?
No, I think that is exactly what we are aiming to accomplish. We found that, the finance committee meetings were fantastic, if not also repetitive, and felt like maybe there was more educational opportunity for our organization. And so that's what we're going after because that's what you told us to do.
Awesome. All right. Well, then I'm going to start sharing my screen to our, let's see, so our highlight sheet for the month of March. So for those of you who haven't seen this before, we kind of run through these numbers based off of our data in March against March of last year, and then also year to date as well. So I'm just letting people in the room as they still roll in here. Okay. So we added 12 new agents in March, leading our total agent count to 413. And we had 50 appointments with agents who would be prospectively joining our company.
So just like a lot of you will track for the purposes of understanding, where there's opportunity in your business or in, for maybe people on your team. We like to keep an eye on the number of appointments that we have and make sure that we are staying pretty close to a 4-to-1 ratio. Now that's not, not every appointment leads to, or, not even one of 4 leads to one in the same month, but we know if we're consistently getting somewhere between 40 and 50, we should be coming close to our goal of grossing or adding 12 licenses a month. So just like, you would want to go on X number of listing appointments or buyer consultations, we are holding ourselves to a similar model.
So for the Market Center contracts written, we wrote 386 contracts in the month of March. That's down a little bit from March of last year and just down only 1% year to date. So that's the first quarter of 2020 over the first quarter of 2021. And from that, we had 175 agents writing contracts. So that's a little bit low. We aim to have about 50 to 52% is kind of the sweet spot for our agents writing contracts. Next down, listings taken was actually completely even. 226 was the listings taken in March 2021 as well. So that brought us up a little bit in terms of our year-to-date numbers, but we're still down 10% over last year's first quarter in terms of listings taken. And from that, 80 agents took a listing. For those of you who this is the first time seeing this, the way that our system pulls the number of agents taking listings, it only pulls the lead agent. So that does not account for anybody on a team. If your rainmaker or team lead is the person as the lead agent on the listing, they're the only ones accounted for that. That's not the same for agents writing contracts. That includes everybody. Okay, so total GCI, that's gross commission income. That is the take-home money of our agents and what comes into the Market Center. So that is up over last year. It was $2,035,542 this March, up 14% and trending up almost 6% year to date. And company dollar is also up. Company dollar is the cap amount that agents pay the Market Center. So that that fluctuates a little bit month to month as people cap and reset, but we were just up this March at 205,000 for the month and trending up 4% year to date. And profit share, this is a big one. So we profit share at $87,692 in March. You'll see that's up 93% from last March. For those of you who were either on the finance committee last year or in different ALC discussions and ownership discussions, you will remember that last March, as the dawn of the economic shutdown was upon us, we were advised by Keller Williams Realty International, our headquarters, to take more expenses in the month of March in order to preserve cash flow going forward, not knowing how the real estate industry would be affected by some of the sanctions that came from the shutdowns. So that lowered our profit and profit share significantly last March. We were able to like take that back in the back half of the year and made up for that. So you'll see the year to date number probably even out as months go on, but this puts us up 36% year to date for profit share as well.
And with respect to that, Julia, we reduced our profitability by about half last year. Is that right?
Mm-hmm.
Yeah. So
Yeah.
Our March March 20 and 21, relatively in line, that flashing much higher for that purpose. And so again, as we look in the back half of the year, we know that we're going to be up against some very difficult comps or comparatives with respect to how profitable we were, because there was another, let's call it $45,000 or $50,000 spread throughout the last 6 months of the year.
Mm-hmm. Yes. If anybody at any point has any questions, please feel free to unmute and jump in. I know some of this, it's the first time that you're hearing it, so let us know. Next are our partnerships. So this is updated monthly based on what we receive from our different partnerships that we have. So from GM Title, we shared $17,060 in the month of March from them. The way that we account for that money, so we receive one check for an entire quarter from GM Title, and then we spread that over the next 3 months. So we were spreading 17,000 and a little bit of change for January, February, and March. And that was actually from the fourth quarter's check. So we will be getting a check this month for first quarter, and we'll spread that in April, May, June, so that it's an even spread of the income that we receive from GM Title. America's Preferred Home Warranties, we had 7,225 in the month of March, which is almost double from last March. It was like, I didn't write down the exact number, sorry. But year to date, so first quarter last year over first quarter this year, it's up about 50%. We had about 19,000 in total in first quarter of last year from APHW, and we're at 29,000 this quarter, 2021. So that's, some of that is backlogging the transactions from 2020. For those of you who don't know, our ALC voted about 2 years ago that warranties not turned in within 90 days by the agent, the market center is able to collect the full $100, and then we share that back in profit and profit share. So that's been a huge boost in our outside income. And Cross Country Mortgage, we receive $7,500 every month from them. That's our MSA with Cross Country Mortgage. So that is always a stable addition there. And then lastly, Metropolitan Management, my typo there. 16,990. This was a great month from them. For those of you who weren't aware, we acquired an additional portfolio business in January, which we're already seeing the fruits of that from another like 200 doors, I think, Mike, if that's correct.
Just under, I think it is somewhere between 175 and 225, probably closer to the 175.
Okay. So by just adding that to the portfolio at GMM, we've seen this is a huge increase in their number in March, and looking for that to continue.
Yeah, really great opportunity for us as an organization. to have that, and from a profitability standpoint, but also at the same time from an access, trust. And look, property management companies are tough, and finding a good one's tough. And so we want all of our agents in this company to feel like owners of the property management company, because it is under the umbrella of our organization. It is technically inside of our brokerage.
Mhm.
So, what we see is the major opportunity in the conversation around property management is, because we are truly accountable to so many more people, and so many people that we are in close relationship with, that we'll be able to create a property management company that will consume all others. Maybe. I don't know. I'm a little aggressive sometimes on the vision part of these things, but I think that there's a huge opportunity.
Yeah. So the last couple points here is just some more data. So our closed units was up in March to 355, which was up 11% over last year. It was 319 last March for closed units, and that's bumped us up, trending upward year to date now. Our total closed volume is up, as well as our average sale price. So which those correlate with one another. Prices continue to increase, as I'm sure a lot of you are seeing with the current state of the market. Our closed volume numbers are up, and so is our average sale price. So I can stop share here for a second. Does anyone have any thoughts, questions? Is there any specific stats that weren't shared that you're curious about that we could either share with you or add to our agendas in the future about the market centers, real estate stats and data?
Can I ask a quick question, Shoshana?
Yeah.
Sorry, I'm driving, which is why my camera's off.
That's okay.
In the flash reports, obviously not weekly, but monthly, could we have some of those year-over-year stats? Just, or do we already have them? I'm just trying to remember. It's really cool. Sometimes they flash by. It's kind of fun to kind of look at them, and interesting to see where we're trending.
In terms of are you speaking to volume or agent count or anything like that?
Does count for an answer? I don't have a great.
Yeah, so we have year over year comparatives on the weekly flash report that goes out to the Agent Leadership Council for most of the categories there. But we can provide a little bit more context and information in that weekly report, specifically around the write up to it as well.
Cool, thank you.
Alrighty. All right, so I'm going to share our financial packet as we are going to highlight some of the categories and items on our P&L, which we call an income statement, as you'll see is the title there, before we jump into talking about your businesses and running P&Ls at the agent level. So let me share screen again.
So what's really cool about Keller Williams is that we are an open book company. And so I believe, Julia, and you'll correct me if I'm wrong, anyone can go into the MyKW, right, and download the most recent financial statements for our company, right?
I want to say that you're right, but I've never had agent level access. So I could check it and get back to everybody. But yeah, it should be available to everyone through your MyKW reports.
Well, and the reason for that is because we're a profit sharing company, and the transparency around where the money that comes into the top of the funnel goes on its way out the bottom is incredibly important to making profit share more valuable and being something that people are interested in participating in, right? So if if Julia was if there was a line item for Julia getting her nails done, or for a golf membership for Scott, to a country club, which, God, I hope neither of those are actually on there. I'm not actually positive. No, but then it's like, okay, so those are expenses that are taken against the revenue of the company, which reduces the profitability for our agent body from a profit share standpoint. So by being transparent, it protects the integrity of our system, and encourages more people to participate in it. We're going to use it as an example today just to show you that, there's so many things about how the brokerage is run and the market center is run are just, takedowns or the next iteration of how we'll, advise, counsel, and coach on looking at your business, your individual real estate business or your team. So with that said, I'll let Julia take us through this document.
Awesome. Okay, so this is our income statement for the month of March. This gets generated at the beginning or end of every month when we transmit our data to Keller Williams Realty International. So this is done monthly because we profit share monthly. And what you'll see is the following category. So it starts with income. So this is everything that comes into the market center, and it's separated into the different types of income that we receive. So if it was a listing commission, sales commission, leasing commission, or a referral, it's categorized here in the current actual, which I'm going to focus mainly on this first column. It can get complicated looking at all the different columns, but I'll tell you at least what they are. So the current budget, we set this at the in the fourth quarter for the future year, and these top two sections are mainly estimates based on the prior year for income and cost of sales, and it's just averaged out across the 12 months about how much income and cost of sales we'll have. And that's similar to the expenses as well. Some of them are just averages, knowing that we roughly spend this much a month. Others have increases in certain months, knowing when like board dues are due, et cetera. We can add a higher budgeted amount in March and September for MLS or board dues.
So thinking about that, around the same time that we are doing a business planning clinic for all the agents in the office, we're actually going through the same business planning process for the market center, based on, hey, what do we want to do from a profitability standpoint? What are our goals? What's the economic model behind those goals, and so on and so forth. So, that's why, budget setting and business planning in the fourth quarter is so important, so that when you get into January, you know what to expect.
Yeah. Sorry, just admitting somebody. Okay, so the current variance, that's just the difference between what we actually received or spent and what the budgeted was. So those three first columns are all about the current period. Then you'll see the year-to-date actual. So that's what has actually been received or spent year-to-date, what the year-to-date budget is. So those up for 3 months, and year-to-date variance. And then the final column is the annual budget. So that shows you, like, I can quickly just show you for like accounting and tax preparation, like our annual budget is 6,000. Our year-to-date budget just 3 months in is 1,500. Our current monthly budget you'll see is just 500 every month. And then what was the current variance? $22 off. And what's the year-to-date variance? We're $1,000 under our budget in that sense. But for the purpose of this, I'm going to focus mainly on the first column. So I explained income is everything that comes into the market center from commission checks. Cost of sales. So this is the market center's cost of sales is paying out to our agents their commissions. So this is the GCI that we paid out to the agents in the following categories. So we categorize the different commissions we receive in those 4 categories. The associate royalty, so that is the 6% when an agent is uncapped on franchise royalty, what comes out, and that is a cost the market center collects that and pays that directly to Keller Williams Realty International. So you'll see here the total commission that was paid out, and then the difference would be the company dollar that we capped. So for any uncapped agent, the 30% the market center keeps, we call that company dollar, and that is what is in this line. So the $205,440 is the monthly company dollar. Dropping down to operation expenses. So a lot of these are standard Keller Williams categories. Some of them are created by us at the local level. And that's why you'll see a lot of them at zero. We don't use every category here. And that would be similar to you as you were looking at the chart of accounts and the MREA model or a P&L that you guys have used in the past. Not every single expense category is used monthly. If anyone has any questions at any time on specifics of these, but I mean, some of them I can just run through, like accounting and tax preparation, advertising. These are like very similar categories that you would see on your own as well when we look at that. Bank charges, computer software, sales awards, if we had contracted labor, gifts or contributions, like you might have that for client gifts, right? So there's similar things when we look at a P&L that an agent would use that you'll see that we use as well. Dues and subscriptions. If you're depreciating anything, that's a big one on the market center level. Insurances, internet, meals and meetings, recruiting. And then you get down to our rent and salaries, which in most businesses, space and people are the two biggest expenses. And we would agree that for us that follows. Taxes comes next for us. Training and travel are, well, travel not anymore, but those are usually two big ones that stand out for us. And that kind of finishes our expenses. So then we have a total, grand total operating expenses. Okay. I'm going to keep going, so just stop me as we go. So these next two sections are other income, inside and outside. So inside income is what we can recoup back internally. So that comes from office rent and desk fees that when somebody rents space in our office. When people have prints, color copies, black and white and color, you'll see that here. The expense for that is above and the income for that's here. Agent transaction fees. So this is when we receive a 199 on your commission. Part of that goes into this category. The other comes through to tech and legal. As you'll see, you have $49 for tech, $78 for legal. And when you're capped, it's $72 agent transaction fee. So that's where that gets broken up. And we call that section inside income. Outside income are those partnerships I was just telling you about on our highlight sheets. So you'll see here the $7,500 for the mortgage MSA. We also receive $500 for them in rent for the space that they have in our office. The closing entity JV, that's the title company, joint venture that we have. The home warranty affiliation is here, and then the property management is here. Those all total down here where you have the total of the outside income. And then the other total of other income is the two combined. So we received $97,000 in inside and outside income in the month of March. That then generates what we call the KW approved costs. And that is our grand total operating expenses minus the inside and outside income. And then these final two sections is where it calculates what the profit share, franchise royalty, and owner profit is for the month. And then the last page is what Keller Williams refers to as below the line. So these are all just ownership expenses, and they do not affect anything above the line, which is where profit share is. Does anyone have any questions about any categories on our expenses, why we have outside versus inside income, our cost of sales, or our income in terms of the commissions that we receive? We're going to be sharing this probably monthly just to like continue to familiarize you with what our financials look like. So don't hesitate if something that you think of comes up later and you had a question about that or that line. Both Mike and I are happy to jump in and dive a little deeper on any of those subjects with you. I think I can stop sharing for a second if anyone had anything that they wanted to ask or comment on from the Market Center's profit and loss statement? Okay, so we're going to transition now to talking about agent financials, agents and teams running profit and loss statements, how to track your own income and expenses, and the best ways that you can do that for you and your business. So I guess before we get started, if you want to like click the hand or write in the chat, how many of you currently keep a profit and loss? Shoshana? Awesome. Okay, great. Then we have a great Colleen, yes, in the chat. Thank you. Okay, so oh, sorry, Shoshana, I just saw your comment as I had share screen. Next time I'll zoom in more. Okay, so Mike, I don't know, do you want to share screen to the?
Why don't you go ahead and share screen, because I don't think I have rights to, and I can just talk through it. But one of the things that allows us to have such a strong understanding of where our money is coming from and where it's going is because we have this system set up that expenses and things are logged on a weekly basis. Obviously there's a lot of rigor and process around paying commissions, but this has been for 18 years the model for reviewing the profit and loss with some obvious updates and changes. But and so when you look at that, it might be like, oh my gosh, like that's a lot, I don't have any of that. And candidly, you don't need it, right? Like when this Market Center was 27 agents, right, there were a lot of expenses that were just zeros on there, right? So don't feel like if there's a line for phones that you need a desk phone because there's an expense for phones. Everything is going to be very malleable. Additionally, I'll start by saying that like we're going to walk through a Excel spreadsheet, right? Which if you know me, you know that my entire life is run by Excel spreadsheets. For some people, life on a grid like that makes a lot of sense and is very easy. For other people, it's not. And so there's software out there, whether it's QuickBooks or Expensify or whatever, there's, a lot of people making a lot of money helping people track their expenses and understand what's going on with their business. If you know that you're one of those people that, oh, I need a QuickBooks where I can just sync it to my bank account and I can do this and I can do that, by all means, go get it, right? The most important thing that we are after with a profit and loss statement is awareness. And if you were a part of the last Money Matters Mastermind, and we talked a lot about the foundation for good financial decisions starts with awareness. Where is my money coming from? Where is my money going? Does that make sense? Right? So, oftentimes we look at our finances as like, how much money did I make? Right? Or how much money is in my bank account? And that's fine. Like we will all at one point or another, like, have to pay attention to those two things. But there's so much happening underneath that if we become aware of it, then we can make changes, or we can decide to make a decision about how, like, what's happening with that money. So Julia, go ahead and share the Excel spreadsheet, and then we'll share this out. We'll drop it in the chat box and email it out as follow-up. But it is pretty straightforward. And go ahead and so this is for every month of the year. There we go. Nice zoom element there. And so there are 7 different categories that we are going to list for revenue, right? And the big chunks are, what is my income? What are the costs? What is the cost of procuring that income? And then what are the expenses that drive my business, right? And so we're going to talk first about, hey, where all the money that I'm making, where is it coming from, right? Because we think very generally that like I generate commissions from sales, which we do. And we want to understand what type of sales generate what type of income. We'll talk a little bit more why that's important. And so we can understand our total income ability and income capability. But then also, when we are a wealth focused company, and most wealthy people have multiple streams of income. So when you think about just as it relates to real estate, I know there's several of us on this call who have other things, but just as your real estate business, you have the buyers you close, the listings you close. Some of us do rentals, so there are rentals that you close. There are referral fees that you generate, right? When you send stuff out of town, those referral fees can be generated. Some of us on the call participate in profit share, right? Which should be logged as a part of this income. Some people have other, client services, right, where they do staging or cleaning or photography or something like that. And then there are joint venture opportunities like, being a part owner in a title company. Understanding all of your different income sources will help you better understand, right, how you want to spend your time in the future, right? Because your financial budget and your financial outputs should tell a story about where you've spent your time and where you want to spend your time. So an example that I'll use is the amount of time, energy, and resources it takes to run a buyer versus the amount of time, energy, and resources it takes to sell a listing in the current market, right? Now, these things are always going to be changing and our businesses should be changing with them. But if we just think about all of our sales like sales and we say, oh my gosh, I work 80 hours a week in real estate and I make $100,000 a year, right? Because that's what everybody wants to make in real estate. So we make $100,000 a year. And we look at that and we say, okay, so I worked 4,000 hours in a year because I did take 2 weeks of vacation. So I worked 4,000 hours that year and I made $100,000. So I make $25 an hour. But if I also understand that, I ran 25 buyers and had 5 listings, the 25 buyers took 70 hours a week and the 5 listings took 10, right? My dollar per hour, I can start to make sense of that. Or, if anyone's ever referred a real estate deal, it's a really exciting thing because you just get paid for introducing 2 people to each other. It's quite amazing. But understanding that as it relates to your total income will help you understand in the future, right? You do this for a year, and then when you go to the next year, you're going to be looking at your profit and loss statement to understand, hey, where do I want to grow my business, right? Where is it most valuable for me to grow my business? So then typically, the way we think is like, okay, I got all this money. Now, how can I spend it, right? But it's important to understand how some of it is being spent before you even have the chance to spend it, right? And that's your cost of sales. And so that's the next section. And these are things that are, unique to commission-based industries. But, getting paid a referral fee is awesome. Sometimes you have to pay referral fees. And paying referral fees is an important way to really calibrate how much money you are making, right? Same thing, your company dollar that you pay to Keller Williams Greater Metropolitan, the franchise royalty they pay to KWRI. If you are a rainmaker, right? You have a cost of sale and what you pay that team agent. If you're a team agent, you have a cost of sale in terms of what you technically pay your rainmaker, right? Now, if that doesn't make sense, we'll talk about that a little bit later. And then the number one thing that I think gets overlooked is, I sold 25 homes and I made $100,000 in gross commission income. That's awesome, right? And you also, gave up $1,000 on 7 of those transactions to get the deal done to close the gap, right? Well, now you actually, and we'll add a line in before we send it out, but there should be a break before expenses where you have your gross profit, right? So you would go income minus cost of sales equals gross profit, right? And that's going to be your gross profit margin, right? And, that percentage from income to gross profit is gross profit margin. So if I made $100,000 in GCI, because I did 25 transactions at $4,000 a pop, And then I paid out $21,000 in company dollar. I did $7,000 in concessions. And actually, 10 of my deals were from either Op City or relocation companies. So I actually paid out $16,000 in referral fees, right? So now all of a sudden, my $100,000 in gross commission income looks like $65,000 in gross profit. Still not a bad day at the office by any stretch of the imagination. You can live a very nice life at $65,000. However, whenever we are business planning, if we have this information at our disposal, we can make a decision about, man, those 10 deals that I got from the reload company cost me $16,000. How do I get 10 deals? Where do I want to invest my time, energy, and resources to get 10 more deals that doesn't require a 40% referral fee to a reload company or to Op City? Yeah, Carol, we'll drop a copy of this in the chat, and also we'll post it online. But I think that if I was going to identify the one place where we gloss over in our business planning, and where we gloss over in terms of understanding how much money we're actually making, is we don't appropriately account for the cost of sales. Specifically on referral fees paid and concessions. I think if I've looked at and talked to enough agents about their businesses, I think those are the two things that are most overlooked, right? And they're not bad things. I'm not saying don't pay referral fees and don't have concessions, right? But to understand your business at the highest level and get to make intelligent decisions about where we want to take your business, right? Where you want to go, how much money you truly want to make. Those are the biggest places where we leak cash, right? Or don't appropriately account for it, and we bust our butts and we sell 25 units, and we're expecting an $80,000 as our paycheck, and our paycheck at the end of the year is 60, right? Because we didn't appropriately qualify those things. So if I have all of my income and I understand all the different places that it comes from, and then I have all of my cost of sales, right, and all the different places that I had to put money to get that. Now I can go down to the expenses, right? And these are going to be the ways that I spend money once I've procured a client, or have my business. And where am I spending money? And this is where you can have as many categories or as few categories as you want, right? We talked about this from a personal financial statement and a personal expense tracking standpoint. Some people have, one category that's just groceries, right? Just groceries. And other people I have groceries, and I have food that I eat out, and I have whenever I order a drink, and I have it divided to wine, and and you can split this up, or you could just put listing management, or you could have photography, cleaning, etc. The more detailed it is, the more you'll be able to determine the ROI of that, right? And start to tweak it. But it's important to understand all the different places you're spending money, and also identify them as fixed or variable costs, right? So understanding that when you rent office space, that is due, that is going to be, like when we sign a lease as a company, that is a fixed cost for the length of the lease every month, right? There is, $26,500 due to landlords, right? Now, variable costs could be things like, how much you spend on print marketing in a month, right? You print a bunch of flyers, it goes up. You print not so many flyers, it goes down, right? So there are, every cost is controllable. It's just on what time variable, right? But as you look through this, you'll want to make sure that you are building as robust as you are comfortable with from a category standpoint. And then, understanding that the best way to do that is if you ideally have a business banking account set up for yourself where you are putting all of your business expenses. You can print off your bank statement, print off a credit card statement, and just look at where money has gone. right? Maybe it's client gifts, maybe it's in client meetings, right? Maybe you do you do coffee for the contract writing, and you do a celebratory dinner once you're past inspections, and then you do something else, right? So where that money is going, you'll need to understand, because then that, as you add all of those up, will drive your what's called your operating margin, right? So you take your gross margin less your expenses, gives you your operating margin, or your net operating income, or the money that is your money pre-tax, right? And so once you understand that, some months it will be a lot, some months it will not be so much, right? And then that helps you understand the cadence and the flow of your business at a much higher level. Because if I know that I've got $16,000 a month in fixed costs, which some of our teams do, right? There are 5 transactions required to just cover the cost of being open. And in some months, 5 transactions might be all that we do. We might only do 5 transactions in January, but I might do 15 in July, right? And that 15, so 0% or $0 coming in might lead to $30,000 coming in July. But if we don't know that or understand that or have visibility to that, both forwards and backwards, then we're going to have a hard time making really good medium and long-term decisions, which, is what we as an entity, Keller Williams Greater Metropolitan, right, talk about what's happening this year. What do we think for the next 4 years, 5 years, and then into the next 10 years, and hope that our, we want to help our agents think the same way, right? But I think having a place for everything that you spend to show up will have you think twice about how we spend, which ultimately is good, because some things truly drive your business. You could spend $1,000 a month on buying leads, right? And that could get you 2 deals, which could be $10,000 in gross commission income, which is a 10-to-1. That's a fantastic investment. That's a whole hell of a lot better than paying a reload fee of 40%, right? Which, I mean, you're getting a 2.2-to-1 return on that. So before we talk any more about, I guess a couple of other thoughts around this. Any questions as it relates to income versus cost of sales versus expenses, gross profit versus net profit versus anything else? Or for the people who said that they have P&Ls, did you just wake up one day and say, sweet, I've got a P&L, this is going to be awesome and I'm going to be rich? Or was it like, what was that learning curve like in terms of being consistent in inputting the information?
Like I used Andrew's that he gave as a sample last, I don't remember, last year sometime, I think it was fourth quarter.
Yep.
I used it as a mock example. I am not an Excel spreadsheet guru, so I had someone draw it all up for me. But now I'm 100% addicted and I'm having spreadsheets on everything myself. All you have to do is teach me once, but it is super helpful in terms of expenses, as well as all the team members and their houses that they're selling. And it was super helpful as an example and a template for me to use.
So Colin, was there anything that you were surprised by as you started to put your expenses in? You're like, oh my God.
Well, at the same time, I drew up a personal one. So I'm driving my husband crazy, but like you said at the beginning, it's more of an awareness, because it really is powerful to look at as the numbers are adding up at the bottom, horizontally and vertically, across the board. How much my kids spend on Amazon. So we talked to them on how we have a decrease in Amazon spending this month, and they're actually interested in, and oh Mom, we have to wait till the next month. I mean, like you said, it's more of an awareness when you're all looking at it in front of you, in your face, either it be personal or professional. But on a professional level, I never did it because I needed to see one and use it as a template. And Andrew's was amazing. I talked to him a little bit about, how he worked it, what each column meant. But because he has team members, it was very helpful for me to understand how we incorporated all that into one.
Yeah. And I mean, you within what, like a few weeks, a few months, were able to pick it up and just integrate it as a part of the way that you now do business.
Yeah, absolutely. I mean, when the deal closes, it's part of our closing process. Carrie sends those checks out, and it actually forces me as part of our closing duties, closing it out in the MLS, or if it's not our listing, the master Google sheet we have, or the dot loop, making sure everything's all in order before we hit closed. And then that's another step that we, or that I utilize to make sure that all goes on there.
I love that. That's the most important, the biggest lesson learned for me as I started to engage in this first from a personal level and then from a professional level, is that, if it is its own task and its own thing that you have to do, I mean, it is like, it's like doing laundry, right? Like, you don't do it until you absolutely have to, and then you lose the benefit of that awareness, right? But if you,
I just kind of forced myself as a New Year's Eve resolution in my business. Part of my New Year's, part of it was to commit to myself in doing this because I want to grow, and I need to know where the monies are all going, as my mother-in-law would call them, they're her monies. But just to where it is all allocated. But again, to look at that all on one sheet is, and like I said, even from a personal level with tuition and your house payment and, all that. It's quite enlightening. We have ran from the seat of our pants for quite some time in the house. But now that Mama's getting more business orientated, it's just, like you said, it's more of an awareness, and it's more of a, every time you want to go out and put that credit card down, it's, do I really need this, or do I need to really purchase this, and personally, and then as well as being more smart in your investments as a real estate team.
Yeah, right. And I think that there's, especially when you start to look at, for some of our teams or even individuals that, they look at their, what they're spending in lead generation, or what they're spending in advertising, or whatever their their drug of choice is. When you become aware of that, right? It's no different than your calendar. When you start setting a calendar and you become aware of how you spend your time, you're only then are you able to be accountable to the outcomes, right? And it looks very clear if I'm, spending $2,500 a month on marketing and advertising, and I can tie one deal back to it, and I'm spending $500 a month on my sphere, and I can tie 5 deals back to it. What would my life look like if I flipped those two things? But you'll never get there if you just think like, oh, I did 6 deals last month and I spent $3,000, right? Same thing with the amount of time you spend for a buyer versus a seller versus a referral, and what do you have the capacity for?
No, I thanked Andrew for doing that. I mean, that was very transparent in terms of letting people allow you to look at what he made and what his team made. And I mean, but that was enlightening. And I thanked him for sharing that publicly with us.
Yeah. He's fantastic in that regard. And, he's a big student of Dave Ramsey, both personally and professionally. For anyone who doesn't know Dave is, one of the big names, and he's like the Michael Jordan of personal finance, right? Like he's got a lot of great materials out there, and Andrew actually coaches with him, and so the content that Andrew shares with all of us is heavily pressure tested and heavily vetted. So for anybody who's not currently using a P&L, or doesn't currently have a tracking method, any ahas, anything that you're like, hey, that looked a little scary, or that looked a little confusing, or I'm interested in, more about this thing or that thing? All right.
I'm gonna interject here because I did not even know, I don't know, I still don't know how to do math problems and do the math equation on the Excel. But for those of you that are sitting out there going, well, God, I'd love to do this, but I don't know how to set it up. Just ask those 3 fabulous girls in the office, because they know how to do it. Danielle, Carrie, and Julia. And all they have to do is set you up once. You can insert columns, delete rows. Let me tell you, if I can do this and someone sets your math up right, all you have to do is just insert it. Every month, you just bring up your bank statement online and you can just insert all your numbers. It literally takes me 5 minutes. It's a piece of cake. Just ask for help, that's all.
And Colin, you probably agree. Most of the time, whenever people start to do this on a consistent basis, the only regret that they have is that they didn't start doing it sooner, because there's there's so many deals or so many years worth of business that they don't have, they don't have that piece of understanding around. But as soon as you get a baseline, then you can start to dial in your business and you're really in control.
I agree. The first step is taking the first step. So it's the first start of the second quarter. Commit to yourself that this quarter you want to do it and have it done by Monday. And, they can share with you in Google Docs. I mean, and, it's just amazing. I can't even tell you, I did not grow up on Excel, so I'm not an Excel guru, but I am getting addicted.
Oh, love to hear that. Music to my ears, and probably nails on a chalkboard to Danielle if she's within earshot, since everything has to be a spreadsheet or a tab. But yeah, guys, as follow up, we will send out both of the things, everything that we reviewed here today, with some how-to and some instructions. And please, if there's anything that you have a question on, you are not bothering us. If you reach out and you want to know, hey, run through this again, explain this again. We talk a lot about the mission, vision, and values of this company. And the middle line and the mission statement is so that we can have businesses worth owning. And I will tell you that if you do not know where your money is coming from, how much it costs you to make that money, and then where you're spending that money, it's a lot of people would argue you don't have a business. And so it's our goal to help you in this business building activity so that we can achieve the mission of the organization. So with that, I apologize. I have to pop out for my next appointment, but look for that follow-up this afternoon. And Julia, I'll let you take it from here.
Awesome. Yeah, I will send that out to everybody. I'll send out the stats that we shared, and we'll make sure that those are highlighted more clearly on the weekly flash that some of you receive. And then a copy of our income statements that you can just take a look at how ours looks with current budget amounts and current expenses. So it's one thing to log what you're spending every month, but once you start that and you can see your trends, then creating an actual budgeted amount around that to play a little red light, green light, that would be important for your P&Ls. And then we'll send out that template, which is totally editable. People have different expenses related to if they're in coaching or if they have teams. So we'll get all of that out to you. Does anyone have any other questions before we wrap today? All righty. Thank you guys so much for joining. We will be back in May. And if there's any topics that are top of mind for you as we start off this new mastermind in lieu of finance committee, please share that with Mike and I so that we can best benefit you, your businesses, your wealth in this industry, and we'll continue from there.
Thanks, Joel.
All right. Yeah. Thank you guys. Have a great weekend.